Hey everyone, gonna just be doing a quick video on the speed resistance fans, just because a few people asked me on a few different comments. So I did do a video. There is a video on the YouTube channel talking about them, but I'll go a little bit more in depth just with a quick video, but also just showing more the levels I'm using. So firstly, for the resistance fan, you'll find it over here in that Fibonacci area, right over here, the Fib Speed resistance fan. For the settings that I'm just using this top portion right here. So I'm using the 0.382, the 0.618, 0.65, 0.25, and the 0.5, and then the 0.786. So those are the levels I'm using for my analysis. And then what I like to do is for these two levels right over here, that 618 and the 0.65, I make them the same color because you always want to look at that specific area a little bit as a zone. So you can see right here when they all are single lines, but when it does come into that, it gives it a little bit playing room for that specific area. So that's what I do for my settings for that. And then really again, just how to use them. Like I said, I did go over this in another video, but I'll just do a quick recap as well. So right here on Bitcoin, for example, so if we're gonna start off, let's do it on the 12-hour. But so you generally always want to find, same as a standard fib, when you're doing standard fibs, you want to find a low and a high, and to see where price can come into. And then if you're going to see where you might find resistances, it's going to be from a high to a low. So so we're gonna do it from this low right over here to this high over here. Whenever there's two equal highs, I always choose the one to the right. That could be on any time frame. So it just gives you the most that's just what I do for it. But yeah, so and then also turn on your magnetic tool whenever you're doing that, just so it really clicks to the wicks. So I do the wicks of any level. So say right over here to over here, this wick. And then you kind of always want to zoom in, just make sure you really clipped on to that, because with the magnet tool, sometimes magnets see different things. So yeah, so perfect. And then so I always do one like this, and then maybe even a larger one. So we could go from like a weekly or any of these larger time frames. Sorry, my computer is a bit slow. Here we go. So that's one, and then you can do also one from, say, down here. Again, get that wick to that higher high, or that high over here. And then yeah, so perfect. So now we'll just kind of go over kind of what price did, just so you guys can see of how price generally interacts with these lines. So whenever you get whenever you get intercepting lines, definitely take those areas serious. So places you see intercepting lines, obviously this one we can't use because we just that's where we're anchoring things from. But right over here in this area, that's a important area because we have two interceptor lines. Right over here where we got that bounce from the bottom, that's an important area, obviously, because again, there's intercepting lines. That's, so that's why I'm saying whenever you do get those intercepting lines, that's usually where you're going to be bouncing from. And then when you come up, I take trades whenever they come close to a line. I'm always looking on Market Cipher to see if I'm getting any signs to show that we're gonna have a move from that. But I'm pretty confident even just like entering trades just off of when it touches the level. Obviously you don't want to do that because Market Cipher is an amazing tool. So anything extra you can add in your side of the court, so to say, it's gonna really help you. But just off of these two examples, you can see of how whenever it comes near or at one of these lines, you want to look to see what Market Cipher is showing. And you can see obviously right over here we're getting multiple divergences, so that's why we had that bounce from there. Over here, I'm sure if we go in the lower time frame, say like a hourly time frame, let's wait for this to load. Yeah, hourly time frame. We didn't see any divergences. It would have been on a lower time frame then. Let's take a look. So for the lower time frames, sorry, my computer I think needs to have a break, but yeah, we weren't really showing. Oh yeah, no, right over here. So you see. Oh, sorry, wrong place. Yeah, so we didn't really show very really anything from that. Of course, if you go to lower time frames, you could, you could obviously find something, but you generally want to see it on the higher time frames just because it's, more powerful. There might be some hidden bearish divergences, something, but right now we're just kind of more going over how to set these resistance fans up. So, so again, as you can see, we've got it bounce from here, had it bounce from here. We came back down intercepting lines. We had a bounce from there. And so as I was saying on the past few videos, this area right over here, that 91 to 92 area, since we have intercepting lines there, that is definitely an area you want to be cautious of. Obviously don't be looking for long trades at that area. You want to see price come above it, hold that as support, and then that's when you can really bring that confidence in to start shooting for those higher targets. So yeah, so that's just a quick recap again on these resistance fans, and then let me show you guys one last thing as well. So you can, depending on how messy you're okay with having your screen, so to say, like for I know a lot of people say, don't have your screen cluttered. For me, each line, the more intercepting lines and more confluences with different strategies and stuff, for me personally, that's is how I'm able to get really good trades, because again, you can never have too many confluences matching from different trading strategies in a specific area, because again, like it is they're different things people are looking for, but they usually always kind of have similar levels that kind of all coincide together. So yeah, so that's one thing to keep in mind as well. And then so since we're coming up to the upside now, you can actually take fan from this high over here to this low over here, and then again you can see that where we found resistance from is we came up over here, had a rejection down, came above it, had that as support. So we kind of glided down on this line, broke past it. We couldn't hold above it. We came under. Now we're getting rejected again off of this fan. So, we really have to break above that before we can, give this area right here that shot and hopefully break through it. And then yeah, so that's the rundown on everything with the resistance fans. I hope that helps you guys out. And then yeah, let me know if you guys have any specific questions. But again, really just really mark your charts up, find areas where you have a lot of different intercepting lines. There's a video I'm going to link to as well. It's the longer version of it. I'm kind of going on like the theory of what these intercepting lines kind of mean with me. I'll give the quick rundown, but basically, there's if you guys know, for example, how like Japanese do math for multiplication. There's two ways you do it. You could go like either like say like 11 times 12, and then you could go 2 times 1, 2 times 1, 1 times 1, 1 times 1, and then add everything up, and then you'll get your answer. Or you can also do intercepting lines. So you basically you put lines like this, and then they kind of intercept, and then you add the intercepting points up, and then you also get the same answers. So one way is more mathematical, one way is more visual, and gives a little bit less room for error, in my opinion, just because you're doing addition to get multiplication, so you're not doing any times tables or anything like that. But again, it's just there's different types of people. Some people are really good at this types of things, more mathy, and then some people are more visual learners. So this That's why I'm saying that, really mark those charts up, because again, it's not hard to spot an area where you see a lot of clutter of intercepting lines. And then you'll see that almost all the time, whenever price does come up to that area, it does have a pretty strong reaction. And then once you're getting, a little bit deeper in your trading education, you could then start throwing different things on, like volume profiles of different areas, say for example this area, or this whole zone right over here, and then throw on some standard fibs as well, from this high for example to this low. So then it's just different areas you can also pay attention to when price does come to it, because you can see right here for example, we did come up close to it, this 382 level, but then we got a rejection down. I find that the fan levels are a lot more accurate than the fib levels, just because again, the fib levels are very static. They're straight lines across your screen, versus these ones, like the resistance fans, they nothing in trading is really static, where it's just moving up or down. It's always having highs, lows, highs, lows, high lows. So it kind of dances nicely in between these different areas, a lot better than these more standard fib levels. Again, those are definitely still useful when things do show at the same levels. It gives it even more confluence. I just prefer the fans over the fib, the standard fib tool, if I had to choose. But luckily I don't have to choose, and I get to use both. So yeah, so just play around with it. You can add this onto your your regular TA as well, and you'll just see that again, those levels that you do have marked out, a lot of times it will be it'll be adding up to similar levels that these fans are giving you. So yeah, so again, let me know if you guys have any questions or anything, and I hope this helped you guys out.